Good afternoon, everyone. My name is Jin Kong. I'm the global head of legal at Hashed. And today we're honored to have two really good friends of mine to talk about the evolution of digital assets and its regulatory landscape in different jurisdictions. Before I start, though, I like to humanize a potential regulator before talking about things, because at the end of the day, we sometimes forget that they are human beings at the end of the day. So, Brian, I would like you to perhaps talk about your background and what has led you to join ADGM.
Okay, thank you very much, Jen. It's a pleasure to be with you all. As someone might expect, obviously, there are things outside of regulation that we do. And so my journey, I think, just to give a very quick synopsis, started out in the industry. It started out from building products. It started out actually in finance, traditional finance, in banking, corporate banking, later in investment banking. And then I founded a fintech startup that was looking at cross-border payments. And then I transitioned from the industry perspective of trying to push the envelope, push the ability of regulators to understand. I think a lot of the conversation was like, regulators don't understand the space. How are they going to formulate regulation that's going to help us if they're not well versed with the developments in the industry? And so I moved into this space with ADGM, and I currently lead the fintech unit to help bridge that and being able to now take a perspective of not just one firm, but actually the entire market. And a lot of the focus I have is thinking about this more from like a periodic table. What elements do we have in ADGM? Which ones are missing? Where are there opportunities for cross-pollination? And it's really that dual hat that attracted me into doing what I do. But at the end of the day, it is the only way to fully appreciate what is happening in the space is by using these various products, engaging with industry, engaging with startups who are building and solving problems through innovation. I think the invention itself is interesting, and I always kind of step back and think, if someone showed me fire and said fire is awesome, the next logical question is, what can I use it for? And so a lot of the focus for me is, okay, can I use it to cook? Fantastic. Can I use it to burn a house? Of course you can, but at the same time, it's like, what are the safeguards that can be put in to help this grow? And that's, my journey is really about engaging with the industry in that respect. Thank you, Jen.
And we also have another kindred soul flying in from Europe. Thomas, please also introduce yourself for the audience.
Sure, my name is Thomas Nägele, and before becoming a lawyer, I used to code software for about 10 years, so I have a tech background. And in 2016, the Liechtenstein government, it's a very small country in Europe, for those of you who don't know Liechtenstein, bordering Switzerland and Austria, we started a process to think about if we should regulate the industry. That was in 2016, and the answer to that was yes. So we came up with a framework regulating service providers, but also a tokenization framework. That's another topic. I think in 5 years we will talk about tokenization without SPVs, not for now. So we came up with that framework, and that was actually announced in 2018. And then the European Commission looked at what we did, and obviously that also served as one of the blueprints for the European MiCA regulations. We have now in Europe very close, so it's around the corner. My day job is being a lawyer, obviously. We help clients getting licenses in Europe, and my role here is I'm the chair of the board of INATBA. INATBA is a European-based association, but it's a global association to represent the industry, because I think our industry needs good representation, and we have something to say, and I think we matured as an industry, and therefore I think we also need to talk to regulators globally and to help them understand what we do, and also educate the industry how we should approach things, how we should understand also the regulatory side of things, right? Because it's a dialogue and we have to listen to each other.
And I think if I could just add something onto like what Thomas has said, it's an important piece of having a common voice, because one of the challenges we have as on the regulatory side is there a common view coming back from the industry? If one firm says one thing, another says another, and there's a clear disagreement even within the industry of what good looks like, that's challenging. So we're very keen to hear that there's a cohesive voice that comes on the nature of regulations and the engagement that needs to happen. I just wanted to add that. Thank you.
And speaking of engagement, as the global head of legal, before deciding our future home to be in Abu Dhabi, I've spoken with various lawyers from various jurisdictions before making that decision. And so I personally have a lot of my views on ADGM as our next home and why it's very suitable for us. But I think there were some initial challenges in understanding the different jurisdictional framework within the UAE and how ADGM distinguishes itself from it. So Brian, could you walk us through the different jurisdictions that are existing in the UAE and what is ADGM's kind of goal and vision and how does it distinguish itself from other jurisdictions?
Okay. I think you sort of have to take a step back and think about this from like 30,000 feet high to ask the question of when someone flies in and they come into the UAE, appreciating that, first of all, they're different emirates. The emirates themselves have their mandates. And that's one point of reference to start with, which is they're not homogeneous. You see that in the demographics, you see that in the client base, you see that in the focus at the government level. And so when you look at the financial jurisdictions, because I'll speak primarily to the financial side, or ADGM in essence, looking at it from a financial services perspective, you broadly have three possible places you could be, right? You could either be onshore, which is where you have regulators like Central Bank, the Securities and Commodities Authority, ESCAR, you have VARA in Dubai as a presence, and then you have the international financial free zones where you have two in the UAE. You have the Dubai International Financial Center, which has been around for the last 15 years, and then you have the Abu Dhabi Global Market, which has just recently celebrated 9 years. So you might then think, okay, well, why would one go to one or the other? There are a lot of factors to consider over and above the simple, is it a case where I can get a license from entity A or jurisdiction A or B? Some of it is just more fundamental on the legal framework, right? The two financial free zones use common law, English common law. So if you're thinking about business that is international, that has a nexus with the kind of counterparties who will lean on common law, then the financial free zones make sense in that respect. You also have the nature of the target market that you're thinking about doing. Is it primarily onshore? Are you focused on the local jurisdiction where there's already a regulated environment for you to operate in? Then quite naturally, the onshore presence makes sense. When it comes to what we as ADGM are doing, it goes back to why ADGM was formed in the first place. It should surprise no one, at least I hope in this room, that you have Abu Dhabi as the larger contributor to the to the GDP of the UAE. And that contribution has been primarily from hydrocarbons. Where we are, it's primarily oil and gas, which is contributing that. And the government basically said, we need to find non-financial ways to bring in other means of contributing to this economy, and financial services was one area that they identified. At the get-go, the domain of digital assets was front and center. It wasn't an afterthought, it was a deliberate intent right from the beginning to build digital assets into the fabric of what do we do as a non-financial center, what are the infrastructure layers that are needed. As ventures and as enterprises, you commonly think about minimum viable product. Think about that from an ecosystem. What is the minimum viable ecosystem to build the future of finance? And that really goes down to all of these components. And from an Abu Dhabi perspective, it was what legal framework can we put in place? What regulatory framework needs to be there? What are the ecosystem builders, the Hub 71s, the accelerators, the venture side? And it's the combination of all these parts coming together that actually starts to create that DNA that is ADGM. Now, obviously, you need the passage of time to validate this. We've seen initially a lot more startups that were setting up in ADGM. Some of them have matured, they've grown, they've built presence in other jurisdictions. That's a validation of the framework. We've had to go and extend what we have in the framework by building more capabilities, working even within our own regulatory sandbox. Touching on right now what we're doing is, for example, tokenized commercial paper. We appreciate that there are various different products that are coming into the center where we as regulators need to be able to work much more closely with the innovative side. And that innovation comes from the edge. It comes from fintechs, it comes from startups who are building capabilities. But on the other side, you have institutional players that want to leverage that, and they want to know, can I trust them? Are they regulated? Should they be regulated? Are they infrastructure provider? What kind of counterparty risk do I need to cater to? So all of these factors are where we as ADGM are very much focused on providing that those safeguards so that that ecosystem can grow. And I think this as well, for those of you who are in the room, it's testament to that capability.
Great. And speaking of digital assets and the regulatory framework, we wouldn't be amiss if we weren't to talk about EU's MiCA, given it's coming into effect in December. So Thomas, walk us through quickly. I know it's an impossible task, but how is it structured? How does it distinguish itself from MiFID? And what are some of the key classifications that exist within MiCA?
So first of all, it's obviously a huge regulation. It covers basically service providers, issuance, and it has very strict rules for stablecoins. And that is the reason when there was a big social media company announcing that they want to come up with a stablecoin project, that's where the European Commission was quite fast in introducing their framework. And so you have to think of MiCA as a regulation for you as a service provider. So if you provide custody, if you provide a trading engine, if you transfer crypto assets, then you have to get licensed first. And you do that with your national competent authority. So MiCA is a framework which is applicable in the European Union and the European Economic Area. So the member states, if you have your company in Germany, you can apply with the German regulator. If you have your company in Liechtenstein, I'm from there, you can apply with the national competent authority. And that is also the interesting change we will see end of this year. Before, whenever you got a license from your home state, like let's say in Austria or in Spain or in France, it will only give you access to France, right? It was a kind of a very fractionalized system, right? You got one license, but you could only operate actually in that jurisdiction. Everything else was a gray area. We did not know if it was possible. And that changes end of this year with MiCA in force in the European Union. If you get your license in France, you have access to the whole EU EEA framework, and that's 450 million users and 23 million businesses. For me, that's actually the best part about MiCA, that it gives you access to a bigger market. And then obviously if you want to also, and that's another big thing, Europe said, and the European Commission and the Parliament said, we want to allow for issuance. Token issuance is a legitimate way how to finance your venture or your company if you follow the rules. So that's why you have to disclose, you have to have disclosures in a white paper, but you could actually finance your company with a white paper, and again, could raise in all of Europe based on that, because it's actually also harmonized. And the third part is stablecoins, which is a huge topic, right? I mean, there was a big question mark what stablecoins actually mean to also central banks and regulators, and how and if we should actually allow them. And now we have Circle. They got the first license from AMF, so the French regulator. So again, these like the area of stablecoins is very, very, very tough. Like from a regulatory perspective, you have to follow and fulfill a lot of requirements, but again, it is allowed. And now, with the recent changes in the US, that might have changed, but for quite a while, like our industry was not able, like there were some exemptions like here in Abu Dhabi or in the UAE where you could actually set up your company. But in a lot of jurisdictions, it was not possible. Regulators would not even talk to you, right? And that completely changed with bigger jurisdictions and jurisdictions like here really showcasing that it is possible to regulate the industry. It is possible to give clear guidance. And it's possible to allow this innovative industry to provide products and services. And I think that is what I think we will see, that with that harmonization in a way, with that access and the clear guidance, we will see that our industry is actually growing. It was the missing piece, I think, from my perspective.
And unfortunately, we do not have all the time that I would like to have to kind of talk about asset reference tokens, e-money tokens, other tokens. And
I actually spared that out, sorry, but you helped me, Jen. Asset reference, sorry, please.
and also utility tokens, virtual asset tokens, fiat reference tokens here. But I think just focusing on the regime of issuance, the industry has really welcomed the EDGM's support in giving the DLT framework for issuance. Brian, could you just walk us through some of the details and the relevant features and how the industry may be able to utilize the framework for its, expanding its business?
Yeah, and it's actually interesting. I just escaped from a roundtable on this very topic, the DLT foundations within the center. And you sort of have to take a step back and look at the entire space and what required such a framework to begin with. As ADGM, we had a framework for foundations, but obviously that was much better suited to your trusts, the type of entities that are not necessarily decentralized, they're not on-chain in any capacity, and trying to force fit what would be a DLT foundation construct into that regulatory framework was very much a square peg, round hole problem. And so instead of trying to do that, the idea was, no, let's build something from the ground up that actually resonates with where the industry not just is, but also where it's going. Now, a lot of that work extended to looking at what other jurisdictions had done. So obviously you had the likes of Switzerland and various other markets where the ability to actually set up, establish, run a foundation were already in place, and the legal wrapper by which that was possible. A couple of things that were added into the framework that we have here, I think by and large, from a foundation perspective, you might find a lot of similarities. The nature that it's non-commercial, not-for-profit type activities. The barrier, in essence, around it is that you need to be a council of identified individuals. So the completely pseudonymous or anonymized basis of operating such a foundation, as you can appreciate from a how is accountability managed, doesn't really cut the mustard, right? Financial crime is a base requirement when you think about these activities. And so that was an initial piece that needed to be put in place. Now, when you sort of start to layer on top of that, what are the interesting aspects to it? It'll be the ability to actually have the certainty around the activities that you carry out, the ability to then run a treasury. Those are operating in digital assets. From an ADGM perspective, it is thinking about this, what type of digital assets are permitted in the center. You will see that the foundations are operating with treasuries that hold many of these digital assets. Can they custody them within the center? They can. Can they be able to find mechanisms by which they can build and scale the protocol or the utility that is driven by that foundation? They can, and some of those, in my mind, from a financial services perspective, could eventually become financial services. So you could have a protocol building a capability that then becomes, let's just say for an argument's sake, an AMM, an automated market maker, and that in itself starts to extend into financial services. But the foundation itself is not interested in doing that. It is building the base layer on which all of these innovations and capabilities can be built on top. So from a financial services perspective, we are very keen to make sure that the foundation is strong. We understand the framework, we understand the liability, we understand accountability. They understand as well the important aspects of making sure that the security assessments done against their protocol, against the token issuance, very clear white papers and tokenomics. Some of this is bread and butter if you've been able to think about the requirements of just running a foundation. But at the same time, giving that clarity of what the expectation is, we feel makes it much more transparent so that you know what to expect. And that very initial step that was made end of last year with pushing out a consultation paper crystallized through engagement with industry with two foundations that were in conversation at the time in the final set that was feedback from the industry, plus, of course, those entities becoming live foundations. That's in a public register you can see. And that continues to be a growing and budding ecosystem. What do we think that really means when you extend that? It is the ability to identify a foundation in the center, build it, grow an ecosystem, scale, engage with other parts of the ADGM which may be some of them financial, some of them are infrastructure, because things, you have a token you've issued, maybe it's a proof of stake chain, how do you do staking, are there infrastructure providers in the center? All of those types of questions are part of the broader, where does DLT Foundation fit within the construct of Abu Dhabi Global Market? But it's also thinking about future-proof. What does this actually mean when you extend from 5, 10, 20, 50, 500 different foundations? How does that scale? Most of this is becoming very much automated through smart contracts. So it's then asking, what libraries are you using? How are you carrying out security? Are you doing bug bounties? What protections are you putting in that are as transparent as possible, not just for the regulator, but for anyone else that's using the particular protocol? So these are ways in which we're raising the watermark, but also enabling that transparency to be reflected from anyone looking in on those foundations. And certainly what that also means is the feedback as more foundations come into the center is then an opportunity to say, actually, the foundation now needs to start thinking about the next level of progression. We're not afraid to go and make amendments. We continue to make enhancements. Some of these will come out initially as guidance, but certainly if the industry continues to develop in a particular path, that's an opportunity to make enhancements to the existing framework.
And thank you for this proactive view on the regulatory perspective. And looking forward, I think, Thomas, the question I wanted to ask is, even though MiCA is coming into effect this month, what are some of the things that you think are missing from the framework that we should be anticipating in the future?
So that's my personal view, obviously. There are things which some people think are missing, and I think they're not missing, they're missing on purpose. It's DeFi. And we already heard now why you should not regulate DeFi in that sense. But I think what I would actually have asked for is a clear guidance on staking and lending. I think that is a part which is missing. And I think for good reason we don't have NFTs covered, and we don't have DeFi covered. And I want to make that very, very simple to understand. If you have a centrally organized exchange, and you can think of whatever exchange you know, and then you will understand, like we saw, like the cases like FTX. You have the IT admin could easily just access the order book, front run your orders. Something can go wrong with the custody. There can be like a lot of things going wrong because people are providing services, and you have to put trust into these people. And that reminds me of where we actually all started. We start with trustless technologies. So technologies you don't have to trust. They do what they're expected to do. So if you do the same thing with a DEX, with a decentrally organized exchange, if that set of smart contracts is set up properly, you cannot front run people, right? You have to self-custody, and if you want to, you can do that. Obviously, there is a part which we should always consider, and that's compliance, so money laundering and financing of terrorism. That's a big challenge which we yet have to solve. But so that's like two approaches. One is to regulate service providers who provide services for the ones who do not want to interact with MetaMask in a Web3 in a browser and do that themselves, right? But we should allow, if you want to do that, we should allow that if that works. And I think what the industry has to prove now, and we still do that, and I think we still have to, because for years we were telling regulators, look, we are a fully decentralized platform, and they were not, right? And then the regulators said, yeah, but that you have quite some very centrally organized elements within your platform. So what we have to do is we have to prove that this technology serves the purpose, addresses the risks properly, and then I think regulators will get more and more comfortable with, say, allowing an understanding that there is a part which is outside of the scope of regulation for good reason. We don't need to regulate whatever true DeFi is, right? So we have to understand and come up with a common understanding what that is, and that's going to be actually evolving, like because the industry is evolving. But that is a part where I see is the biggest potential. And yeah, so I don't think we need a MiCA 2 at the moment. I think let's work on what we have now. It's anyway a very tough and challenging journey.
And if I could just very quickly pick on something that Thomas just mentioned, staking, virtual assets lending and borrowing. These are elements that we've just published in a consultation paper this month. So if you have views around those, certainly as we make amendments to our digital assets framework, that would be very, very useful for us to hear from you.
I would invite you to read what Liechtenstein did. It's already in force in law as of this year. We have a staking and lending service provider where we actually did exactly that.
That'll be looked at.
Thank you for witnessing constructive relationship between two different jurisdictions. And my personal hope for the industry is that there will be increasing collaboration between different jurisdictions, especially coming from South Korea, APAC, Japan. We have so many other jurisdictions, and I think given the global nature of the digital asset, I think the greater emphasis has to be placed on working together. So thank you for your wonderful contribution today, and thank you everyone for listening.